In this video, I want to show you a secret strategy to bank 50 to 100% per annum trading Nigerian stocks. Yes, this is very, very, very strategic. I want to show you something that many of you don't know. I want to show you opportunities that many of you run away from. You know, people talk about sell in May and buy in October. That is a nonsense. That is a nonsense strategy. I want to show you how you can actually buy. That period, people are running away from the markets. That period, people are telling you that stocks are going to crash. That period, people have historically feel that stocks are actually down. That is the best time for you to buy your stock. In short, I will show you three stocks that I've traded within this period. In short, they are much. And I want to teach you how you can adopt this model to bank an average of 50 to 100% return from Nigerian stock. There is no exaggeration here. This is backed by data. And at the end of this video, you will see how this works. In short, this is one of the best strategy for long-term investing. That's why I tagged this how I buy Nigerian stocks for steady 50 to 100% return or profits. Uncommon strategy to build long-term rotating portfolio that generates sure cash flow. So if you're looking for a long-term model that you can adopt in the Nigerian stock market that is sure to continually give you solid return above inflation and above treasury bill, watch this video right here. If it's the first time you are watching my video or visiting my channel, kindly hit the subscription button or turn on notification bell. Welcome to Coach Okay. So let's proceed now. As usual, I like to drop my disclaimer. The ideas shared in this video are based on my risk calculations, personal research. Please do your due diligence, please. It's very important before you invest in any company stock. And also know that the stock market comes with a lot of risk due to uncertainties. And make sure you vet my recommendation based on your risk profile. Now, this strategy works for both that are looking people that are looking for conservative opportunities and high risk opportunities in the market. But guess what? I'm going to mix both of them together. So this is like hybrid. So don't say I'm in this market for dividends or I'm in this market for growth. This model combines both, meaning I want to teach you how to eat your cake and still have it. Now, let's discuss how people make money in the markets, how people make money in Nigerian stock markets. Now, when you buy stock of a company, you earn from dividend, right? When the company declares dividend at the end of the day, or capital appreciation, depending on your investment objective. Now, for someone that is risk averse or conservative, they buy for regular cash payouts or dividends. That means they invest in the company, hoping that at the end of the year, once the company declares dividends, they'll collect their dividend. That's fine. Now, for some that are aggressive investor, they buy for capital growth. So in this video, I want to teach you I want to show you how to always earn from both. So you are not coming to the market as a dividend investor. You're not coming to the market as an aggressive investor. You are coming to the market as an hybrid investor, meaning you want to earn from both dividends and capital appreciation. And here I'm going to teach you the exact model that can help you to pocket steady 50% or even more in the market. I'll show you some stocks that I've actually used. I remember in 2023, when I started a webinar on cash out from Nigerian stock market, I talked about those stocks. In 2024, I did the same thing and I will share some of the stocks. In 2025, there are stocks that I'm also watching right now. In short, the truth is that I just dropped one of the stocks right here on 16th of April, two safe finance stocks to buy for capital appreciation in 2025. At the end of this video, you will see why you should grab this stock that I just mentioned right here. This is one of the stock right here. I have them here. My target on this stock is at least 50% to 100% this year. And I'm going to buy more of the company stock this week. So let's continue. So we are going to the market to look for dividend and capital appreciation. That's what we're looking for. We're looking for dividend and capital appreciation. Now, what kind of stocks give us dividend and capital appreciation in Nigerian stock markets? We call it dividend growth stock. For some of you that might be hearing this term for the first time, this is one of the best stock in the market. Dividend stocks will reward you far more than treasury bill and government bond. I'm not saying this just to boast. I'm saying this because from my historical records, from my performance, and how I have played this particular stock in the Nigerian market. I have clearly outperformed. For those in my community, go check the dividend growth stock I recommended last year. Go check dividend growth stock I recommended last 2 years. And this year, I'm working on more dividend growth stock. And one of them is sitting right here. You can see here, two safe finance stock. Now, I will tell you why this type of stocks are very, very attractive and why they deliver good returns in the market and why it's best to always buy them around May, June, July in the market. When others are running away, that's the best time to pocket this kind of stock. Now, first thing is the dividend in this stock offers guaranteed cash payouts. So we are buying them, number one, because they offer guaranteed cash payouts, especially companies that have historically declared dividend for at least 5 to 10 years. So for a company to qualify to be a dividend growth stock, number one, it must have declared dividend for at least 5 to 10 years. That makes them dividend aristocrats. For us, I think that's provide some level of assurance that this company will most likely or will continue to pay dividends in the long run. But we're not buying them for dividend because dividend alone cannot give us 50 to 100%. But to an extent, you can scrape certain return out of that 50 to 100% by dividend. For instance, if you can get close to 13, 15% from that target, then it means you are looking for 35 to maybe more percent from capital appreciation. So if we are buying dividend growth stock, we want the dividend part of it to have given us a guaranteed 13 to 15% return out of the target of 50 to 100. And then the remaining part, which is between 35 to 50%, will come from capital appreciation. So that's where the growth comes in. So the growth provides potential price appreciation as a result of impressive financials. So the company must have a feature of dividend and also some level of growth in it. That's what makes it dividend growth stock. So when you go to the market, don't settle for dividend. Go for dividend growth stock because dividend growth stock will reward you, number one, cash dividend payout, and number two, potential price appreciation. But the difference between holding that dividend stock for a long time is because in some years, your dividend stock might come down. So for dividend growth stock, we're going to be rotating. So there's going to be reshuffling every year. So that's the difference between this model and buying dividend stock. In dividend stock, you hold them continuously, whether price is up or down. Your own is to cash out from dividend payout. That makes you a conservative investor. But in dividend growth stock, you are going to be rotating. That means every year, you're going to be looking for stocks that qualify as dividend growth stock. Buy them, hold them, take your cash payout, which is dividend itself, and then sell them at profits from capital appreciation, revisit them again, reshuffle every year. When you do this continuously, you will beat the market steadily. I've seen this and this is clear. So you will see how this works in Nigerian stock market. Now, how can I find dividend growth stock in the market? Just look at what I do. Now, first one is I am looking for companies that have record of consistent dividend payments. That means consistent dividend history, payment history in 5 to 10 years, and huge price swing. That means they don't just pay dividends. That's not the reason I'm looking for because dividend alone cannot give me that return. What's my average dividend? Between 10, 15% and all that. So it can't give me what I want. But there must be a potential, there must be possibility of price swinging high, meaning I want to buy that stock at the bottom. So what I look for is I look for a stock that have dividend history of 5 to 10 years, number one. Now pay attention to where it's getting interesting right now. Now I look for dividend stocks that print 5 to 10% yield today. That means right now, if I buy the stock right now, the average yield on that stock is 5 to 10%. Why is it 5 to 10%? When I compare what the company has just paid, meaning they just finished paying dividends, when I compare what they had just paid, compare with what I have paid, that means, or the price I have probably pay to get a share, it will give me an average of 5 to 10% yield. But here's the main point. What they have paid is not what I'm earning because they just finished paying. So I'm not qualified for the previous or dividend that have been paid because it's already closed. They've settled shareholder, they've closed their book. Now, what I'm looking for is the next payout. Now, when I project the next payout, which is the future yield, my calculation should tell me that the next payout that I'm expecting at the current market price should give me at least 10 to 15%. So, for instance, if a company has just paid 2 naira and the share price is 20 naira, now 2 naira divided by 20 naira, that's 10%. So, today's yield is 10%. Now, based on my projection, I see that, oh, this company might likely increase dividends from 2 naira to 3 naira. Can you see? From 2 naira to 4 naira. So meaning that if I buy it at 20 naira today, and by the time it pays 3 naira or 4 naira in its next the current financial year, maybe next year. Now, what are you going to do? Your 3 or 4 naira divided by the 20 naira you pay today. Do you understand? So if you do 3 divided by 20, that will give you 15%. Did you see? Today's yield based on last payout was 10%, but future dividend payment is telling me that I'll most likely be earning 15%. Now, if the stock pays 4 naira per share divided by 20 naira that I'm buying today, it will be giving me a yield of almost 20%. Did you see the point? So the point is, we want to look for stock that they're having yield of at least 5 to 10%, but based on their projected cash flow of cash payouts the following year, I will most likely be earning 10 to 15%. Why am I doing this? I'm doing this because this particular return is quite impressive for me. Now, when you rush to buy it within the period that it has just declared full year end, you may not get this 15% because the price might have rallied. Okay, let's say the stock was selling for 20 naira when I entered. Now, during the course of the year, we started seeing good financials, good results. Price has moved from 20 naira to reach an average of 30, 35 naira. So 4 divided by 35 naira, you will see that your yield is 11%. So when you buy it when price has rallied, most likely you'll be earning small. But for some of us that keyed in early when the price was at the bottom of the market, because we projected that dividend payout will be very, very high, we have entered at 20 naira. And if the company is able to pay 3 to 4 naira, we'll be collecting close to 15 to 20% return. So our main goal is to buy it now because we believe that the company will increase dividend payouts. Now, what is that assurance that the company will increase dividend payouts? What if it reduces? What if it doesn't pay out dividends? That's where the third point comes in. I make sure the company is benefiting from current macroeconomic climate, meaning the current events that is playing out in the economy or global financial market must be favorable to that company financials. That is where the confidence is coming in. So if the company is benefiting from macro trend right now, and I see that this thing will favor the company to impact the financials positively, it will impact revenue, it will impact profit, it will impact cash flow, then there is higher tendency that the company will pay out higher dividend. Did you see where the projection is coming in now? So if the company is not benefiting from macro trend, then I am not buying. Now, this is where the final point is now. I make sure I buy them at oversold region. Oversold region is very, very important. It is when you buy them at the bottom of the market that number one, you buy when yield is very, very high. Number two, you buy them because you feel that at that point, the price is already oversold. So if you buy them at oversold region and price continue to go higher, you're going to make a lot of money. So these are the things you watch out for when you are buying into this kind of stock in the market. So most importantly, you buy them at the bottom. So what gives you that capital appreciation is number one, you keyed in at an oversold region, right? Number two, because the company is benefiting from macro events, and analysts and institutional investors are seeing that, oh, this company will likely benefit from this trend, they start mopping up. Then you benefit from capital appreciation. And then the fact that the macro event is going to impact on the financials would also help the company to pay out higher yield. That is how I find dividend growth stock in the market. And most of the times in the market, it has delivered good return. Let's look at 3 stocks in the market. Let's look at these stocks. Okay, so before we discuss the stocks, let's quickly look at what's happening right now. You know, I talked about macroeconomic trend. Now, this is how I find macroeconomic trend, what is happening and whether the stock is best fit for that or not. Now, we're going to look at current event right now. Now, here, I teach the 5 macro trend to focus on in the ETC section. So if you want to get into dividend growth stock properly, I teach the 5 macro trend in ETC section. So right now, what is happening in Nigeria is we're already projecting lower oil price because of the whole US-China trade war and how that might weaken demand for crude oil. Now, that means we're going to see reduced FX inflow, just like I shared in my previous video, reduce FSC flow, and most likely it might weaken the naira. most likely it may weaken the naira. Now, already those that joined my March webinar. I had a webinar with my community member in March. Now, one of the main highlights of that March webinar was the W pattern we are seeing on a major key level. That's the US dollar exchange rate. And I told them to go buy dollar around 1,500. So those that joined in March, they will attest to that. And right now, exchange rate has moved from 1,500 to 1,600. One of the things I'll be teaching in my ETC section is how to project, how to forecast exchange rate. So right now, there's higher chance, higher tendency that dollar to naira will continue to rally. Everything is set. I teach the technical setup. In short, if you join my ETC section in February, October, and June last year, go and check the technical setup I teach on USD to naira exchange rate right now. It's already set. So most likely you will see dollar to naira rally higher. Now, fundamentally, you see that the oil price is one of the major factors, and JP Morgan has already issued that one. A lot of global rating firms, analysts are already projecting risk premium for Nigerian market. So that means there's tendency that we might see the naira weaken. Now, if the naira is going to weaken, then it means government revenue from crude will most likely be impacted, and that might actually affect CapEx and infrastructural spending. Now, here's the implication. Here's what I think the CBN most likely do. First one, CBN might want to increase interest rates to address that weakened naira, probably to keep or attract foreign portfolio investors, or worse come to worse, CBN might even devalue the naira. CBN might even devalue the naira. Why do they want to devalue naira? Because if they want to collect loan or the few forex they have, they might want to increase the naira equivalent. So when they devalue, naira equivalent of that dollar becomes higher, and that will probably help them to fund infrastructural project or whatever. So these are the two likely scenarios that might play out. CBN might increase interest rates or devalue the naira. If what happens, the question is which sector will benefit from these two events. So I think this event will likely be bullish for the finance sector. So my next dividend growth stock is in the finance sector. My next dividend growth stock right now is in the finance sector. That is why I issued this strong call on Glofolio in the Glofolio community to say finance stocks to buy for capital appreciation. There are more finance stocks that will be coming very soon, but these are the two ones to buy. The first one right here is a sure dividend growth stock, especially if Q1 results, although we are still expecting Q1. If Q1 result becomes very impressive, then that is it. Because one of the major features of this first one is that they reduce their expenses. I see that they are optimizing their operation and operating costs. Cost to income ratio dropped from 70% to 30%. That means 70% of their sales or their revenue were tied to cost in previous quarter, that's Q4 2023. Now, in Q4 2024, it dropped by at least 50%, down to 30%. So that's also a sign that these guys, and they are investing in expansion. In short, they just established a new business that will most likely be helping to drive revenue going forward. And that business is also in the finance sector. That is why I'm picking them as a dividend growth stock to watch out for. So meaning, number one, at this time, they are printing an average of 10% yield in the market. And based on their projected payout, it will most likely be higher. That means if I look at what they will pay out in 2026, compared to today's price, the yield is most likely going to be around 15 to 20% on that particular stock. This is what I call a dividend growth stock. They have an element of dividend because they've been paying dividend consistently, and they'll most likely be paying, in short, they just pay dividend this year. Now, they have an element of growth because they are just invested in a subsidiary, number one. Number two, they are benefiting from current macro climate, and the new subsidiary is also in the finance sector. That is why you should get on this particular dividend growth stock right now. So I just posted it in April 16th, and today is 21. So you can get on this stock right now to take advantage of dividend growth stock. In terms of liquidity, the stock is highly liquid. This kind of stock institution wants to buy. So I teach all this in my ETC class. I've expanded ETC section right now. So in ETC class for June, I'll be teaching you the exact strategy I have been using to buy dividend growth stock, printing yield of 5 to 10% before they shoot higher. Meaning, when I buy them, their yield, which is what they just paid against their current market price, is like 5 to 10%. But when I compare their projected cash flow the following year against what I'm paying right now, yield will most likely be shooting higher to 30 to 15%. That means out of the 50%, I've already scraped 30 to 50% out. Then the remaining 35 to 80 something percent, they are going to come from capital appreciation, which is the growth nature. So that means if you want to enjoy good capital appreciation, you buy them at the bottom of the market. So, and the minimum holding period is between 6 to 12 months. Meaning, if I buy them now and I hold in the next 6 to 12 months, I'm so sure that I would enjoy capital appreciation. And number three, sorry, one of the things that would drive their capital appreciation is when you look at the fact that they pay dividends. When analysts begin to project that, oh, this company is benefiting from macro trends and this company will likely pay higher dividend the following year, you see demand will start mopping up that stock. But you have already entered early in the market. This is what dividend growth stock will give you right now. Let's look at previous winner. So that won't look like I'm talking stories in the market. Let's look at previous winner. Last year, 2024, I recommended custodian. Now, remember, custodian was selling for 8 naira to 8 to 9 naira in the market. So let's quickly call up custodian shares right here. So custodian shares was selling for 8 to 9 naira last year when I recommended this stock as dividend growth stock. If you join my community, you can attest to this around this region, 8 to 9 naira right here. Now, why did I recommend custodian? First, custodian was benefiting from macro trends. CBN was increasing interest rate last year. And I also projected exchange rate. So go and check custodian results. Custodian made a lot of money from interest income. Custodian made a lot of money from exchange rate. And the share price was selling for 8 to 9 naira. And guess what? The company has just paid 80 kobo. The company has just paid 80 kobo to shareholders around May. If you look at this period now, this was around May 2024. So the company has just paid its 2023 dividend of 8 naira to, sorry, 80 kobo to shareholders. Now, if you compare this 80 kobo payout to 8 naira, that's giving a dividend yield of 8 to 10%. Remember, they just paid. So if you bought that shares around 8 to 9, you would not collect this 80 kobo. But you're using this 80 kobo to ascertain what their average yield is. So around that period, if you had entered custodian at 8 to 10 naira, dividend yield was around 8 to 10%. Now, as of this update, custodian declared 1 naira 11 kobo. Can you see the increase from 80 kobo to 1 naira 11 kobo? The future yield increased to 13.5. So imagine a stock that had a yield of 8 to 10 based on the past payout, and the fact that they are benefiting from macro trend and all that, I saw that their future yield will be higher, up to 13.5% in the market. But if you go check the stock now, you can never get that 13.5. When you could get this 13.5 is at 8 to 10 naira, meaning if you had key in and not the date, this is around May, this is the same May, people say sell in May, sell in May, this would have been a perfect opportunity to mop up custodian at a low price because the stock was benefiting from macro trends. So it was obvious that the company will be impacted by macro trend, which is exchange rates, interest rate, and hence increased payouts. So those that entered at 14 to 15 naira missed the yield. So for those that entered at 14, 15 naira, you cannot get this 13.7. So already, out of the 50 to 100% target in 6 to 12 months, you have already collected 13 to 75% return. Now, what happened? Look at the share price. The share price moved from 8 to 10 naira to reach a high of 20 naira, almost 100% return in the market. Who was responsible for this massive uptick? Institutional investors. So one of the major takeaway is that if you're looking for the type of stock that institutional investors always buy, go for dividend growth stock. Go for dividend growth stock. So this custodian. So you can see you killed it, and we made a lot of money from custodian last year. I made a lot of money. 8 to 10 naira and the top over 20 naira, and you collected your dividend. So even if you collected your dividend right now, where's the price? Is it selling at 17 naira? That should still be more than 100% return. You eat your cake and have it. Collect dividends, collect your return, move on, reshuffle. That is what we call dividend growth stock in the market. They are the stock that can give you steady 50 to 100% in the market. Let's look at the next one, GTCO. GTCO was 24 naira around that same region. So GTCO, this was 2023 when we hosted our Cash Out from Nigerian Stock webinar in 2023. If you remember, if you're in my community, it shouldn't be strange. Around this region, May, 24 naira is around this region. Yes, this region, April, May. Yes, this region right here. So go and check when I hosted that webinar. That was around August. So and then I think I recommended this stock around I think May, August, between May, June, July, August, that region, around 24, 25 naira then. Now, GTB has just paid 3 naira 10 kobo. 3 naira 10 kobo. Remember, you will not be part of this previous payout, but this previous payout will help us ascertain the yield. So when you divide 3.1 by 24 naira, that yield then was around 12.9, which was still impressive. Now it went further to pay 3.2. So future yield increased from 12.9 to 13.3. Now, why did I buy the stock? Because number one, GTB was also benefiting from macro trends in 2023, even 2024. But the major buy signal then was around 2023. So GTB was a dividend growth stock then. I remember I mentioned GTB, Lasaco, and one other stock again. AXA Mansard, yes. AXA Mansard was a dividend growth stock in 2023. It was also a dividend growth stock in 2024. In short, in 2023, AXA Mansard was selling for 4 naira. It topped close to 6 naira. In 2024, I still mentioned AXA Mansard in the community. Now, AXA Mansard has just paid 34 kobo when I recommended it around 5 naira 30 kobo. Look at the share price as at then. AXA Mansard. So let's see if we can find that on charts. So I'm showing you all this to see the opportunities in Nigerian stock that many missed. This is it here. You can see here, Asaman Sad. So Asaman Sad was selling for 5 naira 30 something kobo within that region. So what happened? They just paid 34 kobo. 34 kobo divided by 5 naira 30 kobo, that was a dividend yield of 6.4%. Now, why did I recommend AXA Mansard? Because I saw that AXA Mansard was also benefiting from economic trends. Insurance, one of the major revenue driver of AXA Mansard was exchange rates. This guy generated over 10 to 15 billion naira from exchange rate gain. And CBN has just devalued the currency. So what happened? This company increased dividend payouts. And that took, look at it here, and that took their yield from 6.4 to 8.4. So they increased their dividend payout from 34 kobo to 45 kobo. Now, when you compare this 45 kobo to the market price of 5.3, you see what happens. So the idea is you buy them when they are at the bottom, especially when yield is still printing around 5% to 10%. Now, because you know they will increase payouts, why are they going to increase payouts? Because they are benefiting from macro trends, and you know that their financials will most likely be higher. I teach all this in my ETC section. In ETC, you don't have to wait for financials. By looking at macro trend, you can tell which sector will benefit or not. ETC will help you stay ahead of the curve. ETC will help you see where others see opportunities, where others are running away. So the whole sell in May idea, they are nonsense, they are bullshit. What you do is buy in May, buy dividend growth stocks in May, especially the ones that are printing higher yield and are benefiting from macro trends. Go and check. Where is AXA Mansard today? AXA Mansard has rallied from 5 to reach a high of 10. That is almost 90 to 100%. So if you collect your dividends and it's selling for almost 8 naira, you still print minimum of 50% to 100% return in the market. So what exactly are we saying? When you buy dividend growth stock at the peak, when they are just paid dividends, when their share price is down, especially the ones that are benefiting from macro trends, hold for 6 to 12 months, you will definitely make money from Nigerian stock markets. That is the kind of stock that can give you 50 to 100%. So what you do is when you buy this kind of stock, hold for 6 to 12 months. When is the best time to reshuffle and rebuild? From my investing experience, I always reshuffle and accumulate after receiving my dividend around May to June. So May, June, July, August, that region. So the moment you collect your dividend and you sell at a higher price because you have keyed in early, you now reshuffle and re-enter another dividend growth stock, printing attractive yield with possibility of future yield rising. This is what will attract foreign institutional investors. The possibility of yield rising due to favorable macroeconomic climate. So if this is there, then there is nothing stopping you from getting higher payouts as well as selling at a higher price. Possibility of future yield rising due to favorable macro environment that will impact the financials. So the company you want to buy today, is it being impacted by the current macro financials? Is there possibility that to increase dividends? If the answer is yes, then buy them. That's exactly what I have shared right here. Two safe finance stocks to buy for capital acquisition. This is an example of a dividend growth stock. I can even check previous dividend growth stock right here. I have some dividend growth stock I would have recommended right here. Let me look through my stock recommendations and see. I remember I mentioned some in 2024. I mentioned some in 2024. So let's quickly run down and see if we'll find them on Glofolio platform. So Glofolio give you, this is it here. Two safe dividend growth stock, I plan three. I plan to double down on here. I posted this in July 2024, right here. Can you see? AXA Mansard was 4.9. So that it won't look like, you can see here, AXA Mansard was 4.9. Now, where's AXA Mansard today? 7, after touching a high of 10. Did you see that? You can go on and check right here. Custodian was 11.9. Then remember, I also mentioned Custodian right here. You can see custodian around here, custodian topped a high of 20. Can you see? Safe dividend growth stock. If you follow the recommendations, if you follow my analysis, you will never miss it when it comes to buying dividend growth stock in the market. If you want to join our community for updates on more dividend growth stock, kindly go to www.globfolio.com/subscribe. Pick a plan that works for you. We'll look forward to seeing you in the community so that we can trade, invest, and make money together in Nigerian stock markets. Thank you.